All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out, take a quick look here at the Under Armour entry that I made, and let me just kind of discuss the trade here a little bit. Under Armour, as you know, I'm very bullish on this stock, on this on this stock overall. It had its Investors Day right back here, and gapped on down on that, probably rightfully so. And we talked about it on that day. I believe they sandbagged a little bit. I believe they set it up for the numbers to be very easy to beat for them over this coming year. And I don't think it said anything about the overall business. Nike earnings said a lot about the overall business, which is very strong. And, it was one where I needed to see a little bit of bottoming, a little basing out for me to get involved in, here back again with Under Armour. Now, it sold off. It's snapped on back. It's kind of consolidated here a little bit. We've seen the option values come, back to a little bit to reality. They're still not cheap. And nothing's really cheap out there. But then here this morning on the open, we had a gap up above the 7-hour moving average, and you can see this gap. Let me get my drawing tool here. Maybe. Looks like it doesn't want to play today. But anyway, gapped above the 7-hour moving average here this morning. And, it's one where I had to wait to get in, had to wait. Took about 10 minutes for the spreads to come in. The spreads in the morning on Under Armour tend to be pretty high. But, pushed on up there, has some positive MACD action, and, the secondary gap above that 7-hour moving average. So I jumped into it, looking here at Under Armour, looking for a move up here to 19. If we talk about kind of just retracement levels here for it, if we go from the high, right, we're talking about, just shy of 19 being the retrace level, okay? If we go from the gap down level, right, we're talking about 1920 being the full retrace level. So bottom line, as I'm looking in this 19 to 20 area, ultimately here for it, look, I understand the market environment. I understand what the market environment is, and, how quickly things can shift and how quickly things can change. So I wanted to go with something that, I thought could hold up if the market environment switches and sells. Could not necessarily going to be pure market play, and has a chance to be pretty strong in and of itself. And we know Under Armour, historically, when it just starts to base out a little bit and makes its kind of initial pops, they can be pretty substantial. And so that's what I'm looking for here to get the challenge back and rolling. I'd love to pull $400-500 profit out of this trade, and we go from there. And hopefully it gives us that chance. I do think if we start to see it break below today's open price, I need to take my loss and move on. It'd be about a $200-300 loss, and I'd have to move on from there. And we'd still be, plenty good for the challenge, and it would stink. But it's one of the risks that's out there in the market, these days. As far as the open and the market and all of that, I don't think there's a lot to say about it that I didn't say this morning. We saw a little bit of game-changing elements here this morning or overnight. And market is, going to be a little more focused here on Monday and Tuesday. We do have the Fed stuff, that will be kicking off here in a bit. So we'll have movement, and we'll have ups and we'll have downs. I don't think today is an all clear sign for the bulls or anything like that. I know when I go make a trade, a lot of times there's implications, you read into it like, oh, all of a sudden now Jeff's bullish or he's bearish or all of that. No, I mean, market-wise, we're not seeing a whole lot. But, short-term trade action-wise, we're seeing a lot of stocks move back above that 7-hour moving average, with a lot of gaps. In fact, some of them, I looked at this morning and just the options, pretty darn terrible. Things like a Honeywell. Options pretty darn terrible here this morning for it. You go and you take a look at some things like a McDonald's, very similar chart to Under Armour. But options just pretty darn bad here this morning, to say the least. And there are a lot of hourly charts that look like Under Armour that have that same element out there. And I will admit, one of the reasons I went with Under Armour is because it didn't have the worst options. The options aren't great. I can't sit here and make an argument and say, man, I got this at a cheap level and all of that. The options are about 25% overpriced, but it is still something where with Under Armour I still think I can make some money on that with a decent risk reward there associated here with it. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.